Hej och välkomna tillbaks till den här temadagen här på Erik Bank på temat krypto och DeFi. Med oss nu så har vi Arcane krypto i form av vd Torbjørn Jenssen. Torbjørn, welcome to Erik Bank and this theme on the crypto theme.
Thank you. Really nice to be here, although I wish I could have been on the ground in Stockholm. It's great to join by video.
Great. The floor is yours.
Thank you so much. So it's actually pretty fascinating to be here at a conference hosted by Erik on the topic of crypto. Because just a few years ago, banks like Penser wouldn't even talk about crypto. They wouldn't touch it. They didn't take it seriously. And although the market is in free fall right now, something has changed. The cryptocurrency space is being taken seriously by the established financial system. And the reason is obvious. Cryptocurrencies has become so big and has been there so long, and it's become so clear that this is an important part of the future. And in Arcane Crypto, as many of the other companies presenting today, we are building out infrastructure, making cryptocurrencies more accessible. Ever since Arcane was launched in the spring of 2018, a core focus of ours has been on educating and making cryptocurrencies accessible. And as a result of that work, and especially the visibility internationally of our research arm, Arcane Research, we are now seeing incoming calls from large investors, wealth managers, and banks that are reaching out because they're asking for, or they want assistance. They realize that they need to get into this space and they don't know exactly how. And they reach out to us in Arcane because they trust us, because of that work we've done through the years on educating, and because of that work we're doing on the research front. And speaking to these players from the traditional finance system, and in particular the larger investors, the family offices, the high net worths, we've come to learn and realize that there's a big problem out there. There's a big hole in the market, which is that high net worth individuals and family offices are feeling that they're missing out on the digital asset opportunity. And the reason is that their private bank or wealth manager is unable to help them or even advise them. The private banks don't have the expertise, they don't have the knowledge, they don't have the products, and they are afraid of regulatory uncertainty and don't dare to kind of quote unquote risk their license by adding cryptocurrencies. Of course, you could then ask the question, if these high net worths and family offices really want to trade, why don't they just go to some of the exchanges out there? I mean, there's hundreds of different exchanges out there, all offering more or less the same tokens, the same features. They're competing over having the lowest fees. Their margins are being squeezed. I mean, there's so many you can choose from. The challenge, however, is that these are not tailored for the needs that are specific to family offices and high net worths. On these exchanges, there is no good system to do access management, enabling wealth managers to do managed account on behalf of other clients. There's typically no segregated accounts, meaning that if you held your funds with Coinbase, they are co-mingled with other clients and it's actually part of Coinbase balance. That's an issue. And they are also not having the complementary services. They don't have the research, they don't have the advisory, and they don't have the productification of different exposures. They don't offer different portfolios with different risk trade-offs. And all of this has led us to realize that there's a big opportunity for us to actually serve this market, to tailor a solution for the high net worth and family office segment of the market. And our solution is to offer research, brokerage, and investments on our own platform. We're going to do that, and we're actually already doing this, across the EMA region, where we offer a white glove premium user experience, where the investors can call us, and we will actually pick up the phone. We'll go to where they're located, we'll sit down with them and hold their hand as they walk into this space. We'll help them to learn first, to build trust in the industry, and then, as they get ready, move over to investing or trading. We're building this infrastructure with the intention of really embracing the scalability of a platform. We're already working with different wealth managers, figuring out the different access controls, the different reporting they need to be able to bring their own clients to our platform, so that our platform can be leveraged as a software as a service, enabling all of these wealth managers to kind of take the benefits of building on top of what we have already developed for our own use. And this is a great way for us to scale. And we're building all of this on the same fully regulated cloud-based platform, one unified tech stack, which really, and exactly kind of on Google Cloud, which really gives us the best tools to offer a superior end user experience. So this means that Arcane's position in the market is not as a competitor to all of the exchanges. In our portfolio today, we have both brokerage and we have an exchange. But really what we are doing, we're building on top of these exchanges. We are doing that to make cryptocurrencies, digital assets, more accessible to a specific user segment. And we're adding bespoke services on top of this. The exchanges, for example, are mainly charging a fee on traded volume. In asset management, on the other hand, the normal business model is a percentage of AUM. To be able to charge that, you have to add some extra services, for instance, a proposed portfolio. And the beauty of actually serving the high net worth family office segment is that the margins there will be much higher than the margins at the exchange level, which is currently being squeezed. We see the big players internationally competing fiercely over retail customers. We see them localizing, applying for licenses all across Europe to tailor their offering to the local retail market. While at the same time, the family office market is completely underserved. There's barely anyone, especially in the European context, really designing solutions for their needs. And that is what we are doing. And that is our great market opportunity. So what's the opportunity size here? Well, a lot of people don't really know too much about the private banking segment. And it's a world that they don't like, it's a hidden to them. But the truth is that this is actually a fairly big market. I mean, there's more than 6 million high net worth individuals in Europe today. And the estimate is that this is growing at a rate of around 8% a year. They have a combined wealth of around $18 trillion. And our target market in Arcane will actually be substantially larger than these 6 million, both because we are not only going to offer our services in Europe, but also across the whole EMA region, but also because we're going to put the bar lower than the $1 million net worth investable funds, which is the definition of high net worth individuals. And it's important for me to highlight that this is not Arcane starting to do something new. We've been operational since the spring, or we launched the company in the spring of 2018. We built our portfolio with different service providers, covering the different roles in the value chain for financial services linked to cryptocurrencies. We listed on Nasdaq First North in Stockholm last year. And we have been live with a hedge fund, with a brokerage operation, with a research arm. And what we have seen and learned from having these services out there is that it is exactly from the high net worths that we see the most volume. We see the family offices investing with our hedge fund, offering a superior exposure, a robust exposure to digital assets as an asset class. And we do see that they're coming to our platform, reading our research. Some of them discover it on Bloomberg, Reuters, New York Times, where we get quoted on a regular basis. And then they go straight to the platform and start consuming it either through our email newsletters or on our homepage. So right now, the focus is on the high net worths that are clients directly on our platform, where we are the ones offering the white glove user experience, where we are helping them get into this space of digital assets. And by working very closely with these clients, we are in a great position to iterate and really identify what problems are important for them to have solved. And we can inform our own product roadmap from those interactions. But as I mentioned, scaling is absolutely key to what we're doing. And Arcane is not building towards a future where we have hundreds of different client relationship managers. The work we're doing now with high net worths, ultra high net worths, family office directly is what creates the groundwork, the foundation for us to scale more effectively, leveraging our tech. And as I mentioned, we're already working with wealth managers, where we're setting up the assets management controls, where we're setting up the reporting, so that one wealth manager can bring in 15 of his clients and serve them seamlessly on our platform. That way, we don't have to serve all of those clients directly. We can serve it by having the tech, the execution, the product, and by enabling the wealth manager to really reach or really serve his own clients. And to a lot of these wealth managers, starting with research is actually key. Their clients are not ready necessarily to invest yet, but they are curious to understand what's going on, especially now with increased volatility. Longer term, the holy grail in our plan, our strategy, is to really secure scaling through API integrations with private banks, with financial institutions. I'm certain that in the future, every private banking across Europe, every financial institution for that matter, will have crypto services. And very few of them will have developed that themselves. Almost all will have kind of the capability of serving crypto through a partnership. And we are positioning ourselves as that crypto partner. We're building the tech stack in such a way where all of our services, all the applications communicate with our front end and with each other through APIs, which means that a private banking institution can come and integrate our research. And then a year later, they can perhaps integrate trading or execution, integrate some of our assets, asset management products like ETPs or funds. So we're building this, serving clients directly now, working to enable wealth managers to serve their own clients on our platform, and positioning ourselves to become the preferred partner for financial institutions adding cryptocurrencies and digital assets in the future. So where are we right now? We have the brokerage live, we have clients there. We have our first hedge fund live, we have investors there. But it's research that has really been the core focus of ours. It's research that we are pushing out there. And there's very good reasons for that. And that is mainly because research is a great brand builder, a great educator and door opener. The traction we're getting internationally from the research we're delivering means that we get a lot of visibility. Users all over the world are discovering Arcane and building a relationship with Arcane. And while we can actually monetize this directly, and we already do so in kind of a freemium model, more importantly, this is a great way for us to reduce the customer acquisition cost. This is a great way for us to attract users through research, which we then can monetize through some of our other products. And this is also important when it comes to B2B sales and relationships. We are partnering with both crypto financial institutions and also traditional financial institutions, providing research to them. We recently announced our partnership with Nexo, where we are providing research both to their retail base and to their institutional base. We're providing research to institutional clients of BlockFi. We've been working with LMAX, a big player in the traditional FX space, also active in digital assets. And we're also working with a couple of traditional finance companies that I can't name as they are not kind of publicly announced. This again is a great way to get the foot in the door, because let's say Penser was interested in exploring a research collaboration with Arcane today. That doesn't need any sign off from compliance. That can continue that can get in place without any big hurdles. But then a year from now, 2 years from now, if they are, or when they become ready to add crypto services, that will be easier to do with us than with anyone else. It'll be natural for them to come to us and at least have a conversation about that. And at that point, we are going to be ready to serve those products that are needed. So in Arcane, what we're really focusing on is to build out this private banking, private wealth management platform, enabling investors to build wealth in crypto with confidence. We believe that the education, the research is a key asset of ours. It brings down customer acquisition costs. It builds trust, not only in Arcane, but also in the industry, which is needed for people to actually dare taking the step. We are working now with high net worth family offices directly, but we are quickly going to scale initially through partnerships with wealth managers and eventually through deep API integrations with private banks. So on that, I can kind of round off and open up for questions.
Thank you, Torbjørn, for this presentation. May I start with asking, regarding the research sort of side of things and comparing to when it comes to trading and investing, is the research a viable business on its own, or is it more of a way into your other business, would you say?
So the truth is that it is actually a viable business on its own. And there's actually fairly substantial revenue potential from licensing, where the same contents get sold on a subscription basis over and over. The research team is actually more than self-financed at the moment. But a couple of going forward, I do expect kind of the main value of research to be that brand builder, the door opener. And while we'll monetize research, it's really the cross-selling, if you like, from kind of investment services, from trading, where we do expect to see the big revenue streams.
And in the investment side of things, when it comes to different clients, how trading intensive are you in the wealth management side of things? And does that differ a lot between different clients depending on their preferences?
So we have currently very different clients. Some are trading fairly actively, and some are just seeking a robust long hold exposure or a recurring buy feature. I expect us to mainly focus, and we see most traction from the kind of more actively managed, kind of long-term, robust kind of positions. Those who want to have an exposure to cryptocurrencies, don't want to trade very actively, but want that for a long term. That said, the infrastructure we're setting up now is going to kind of really enable us to offer whatever type of execution our clients want. So we, regardless of whether you do a kind of say a 50-50 Bitcoin ETH segregated managed account with us, and we rebalance that on a weekly basis, that software that does that hedging, source those prices from all of the different exchanges, that execution layer will also be capable of handling much higher frequency trading, that you come in and trade with whatever frequency you want yourself. So we're building towards a future, or like a solution where end clients also can place their orders whatever day of the time, whatever day in the week they want, and trade themselves as well.
All right. And in the research product, is it mainly focused on allocations between the different cryptocurrencies, or is it also a matter of advising clients on whether they should belong the market or short the market overall? How far back in the landscape do you stretch the market view?
Exactly. No, so a lot of the research is actually on industry and kind of descriptive reports almost of the industry. Because this is such a new industry, you have to establish that ground level of understanding. As an equity researcher, you can take one company and you can give a buy, sell, hold recommendation. But when you see things like stable coins collapsing overnight, you have to have this deeper, or exchanges blowing up, you have to have this industry understanding to build on. So a lot of the content is actually industry covering. We are also then sharing our views on the market, drivers to look for. Especially there's a lot to anticipate from the fluctuating levels of leverage. And then we are also piloting with some clients advisory, where we actually kind of recommend different portfolios, we simulate them backwards looking, and kind of show them the different risk trade-offs they can do. And while we anticipate to obtain license for that in the future, the current regulatory state is actually such that we are allowed to give financial advice on cryptocurrencies without a formal advisory license. And the reason is that it's not a security. But we do kind of follow the standards as if we were licensed to kind of give equity advice as well.
Would you care to give a comment on the current sort of market sentiment when it comes to cryptocurrencies? Which are the biggest drivers right now for the market that we're seeing now?
Fair. Yeah, so what we're seeing right now is that the risk appetite in capital markets in general has plummeted, and the capital markets has pulled crypto down kind of in the drain together with kind of with the rest of the market. This has also triggered some of the fragilities in parts of different crypto projects, and we currently are seeing a big stable coin that actually had Bitcoin as a part of its reserves collapsing and dying, leading to this reserves being liquidated in the market, amplifying the fall of Bitcoin. What is very interesting, however, is that right now Bitcoin is and cryptocurrencies are behaving as a risk-on asset, or kind of risk-off, in this case, kind of being pulled down. And a lot of people have therefore assumed that the whole idea of Bitcoin, for instance, being a hedge turned out to be false. But that's not true at all. There's many different factors that determine the price of Bitcoin on the longer term. One of those factors is risk appetite, and that is the factor where we see the highest fluctuations right now, which therefore dominates in the effect on price. 5 years from now, the price of Bitcoin will be determined by the adoption, not the current market sentiment. And there's nothing right now that looks negative in terms of adoption. The infrastructure is only getting better. Regulation is improving. Regulators are finally getting around to get clarification around this. Big investment banks are building out their custody solutions, their trading solutions. They are getting into this space. So 5 years from now, it's those trends that will be important. And when it comes to the hedge, that's not a hedge against a risk appetite. It's a hedge against a systemic collapse of the established financial system. It's a hedge against dollar losing its position as the preferred global currency. That hasn't happened. So we don't know yet whether that kind of hedge bet plays out or not.
You mentioned that regarding exchanges, that possibly the market is oversaturated, and in one of your slides, when it comes to number of available cryptocurrencies, is the market oversaturated when it comes to that? Is that part of the current situation, would you say? And would you expect long-term sort of a shakeout with fewer available options, or a continued expanding sort of investable universe when it comes to different cryptos?
I think there'll definitely be a continued expansion of investable universe. But I think, as I said to a financial newspaper in Norway yesterday, I think at least 90% of the projects or the current crypto tokens will collapse more than 90%. And most of those will not really come back up again. So what you have is that you have this term cryptocurrencies which cover very different types of assets. You have things that are much more similar to, say, a share. You have things that are much more similar to gold. You have things that are more similar to art, more similar to a pure scan. And all of this is kind of bulked together and called cryptocurrencies. I think what we'll see in the future is that we'll get clearer and clearer use cases. And the same way where we have a ton of different shares or kind of companies out there, there'll be a ton of different cryptocurrencies or tokens linked to that. But there will be a shakeout. We currently had so back in 2017, there was a lot of projects who said, we are going to be the new Bitcoin. Bitcoin is old school. Here, this is better. No one is saying that anymore. Everyone agrees Bitcoin is here. It's digital gold. It's robust. The narrative recently has been, we are Ethereum 0.2. We are going to take over there. And my suspicion is that a couple of years from now, we'll see that, well, a lot of those didn't succeed either. That doesn't mean that there won't be other chains and networks. That doesn't mean that there won't be other tokens. But we'll continue to see attempts that fail and new kind of hypes and new things that comes up, and also projects that survive long term. So, but this space is only going to expand, and it's only expanded for 13 years now.
What are the most important factors to judge, would you say, when new products come onto the market? What are the main drivers for becoming a success or being part of the ones who are checking out, basically, would you say?
I just have 5 more minutes, because that's a very long question. So to answer, it's for new projects, most people who are not experts should actually be very careful. The main thing you can look at if you're a normal person is the longevity of the project. And then you can be reasonably certain that the longer a project has lived, and especially if it has survived a substantial bear market, it's more likely to be here in the future. And that's the best metric you can look at. For Bitcoin and now eventually Ether, that's a great guidance, because that way you avoid investing in the hot coin in 2017. That was all gone kind of now. Apart from that, if you really want to expand, then you have to have this multidisciplinary understanding of the tech. You need to be able to read the white paper. You need to be able to understand the theoretical design. But you also need to be able to understand how is this implemented in software, because weaknesses on the design level can make some of these projects collapse, like what we're currently seeing with UST, the stablecoin I mentioned, completely collapsing. And that was inherent in the design of the coin. But then you have the thing, which is that these projects aren't static. These projects has a vision. They are seldom kind of final from start. So you also have to assess the developer activity and the community, and how likely it is that they will be able to deliver on the roadmap they're anticipating. So more similar to an early stage, I see the light, turned out I'm sitting too still here, stage company. So yeah, long story short is that this depends on project to project. You need
this, I guess, is where your research comes into the picture also.
Yes, but our research. So in portfolios we put together, we have also expertise that really enables us to pick the right tokens. Not that they're all going to be successful, but that they have an attractive risk reward and the assessment is done on a deep level. A lot of the research that we are distributing more broadly is to really help the investor understand what are the trade-offs they can do. What are the different risk rewards, what are the different categories? How should they think about NFTs or not? How should they think about these Ethereum competitors or not, so that they themselves can make up their mind? So we both offer, here is our recommendation, and then the underlying research for that is too massive to kind of share to a normal investor, and we also share higher level material for the investors to navigate themselves.
Great. And when it comes to your specific business model, who are your most important competitors? And are they sort of situated in different structures around the sort of landscape? What is your competitive landscape like?
Yeah, so there are a couple of private banks that are crypto native, like Seba and Sygnum, who are here. But they also have the banking license for good or bad. We intentionally are not going to have the banking license. We are a crypto sharpshooter, and we are going to work with banks to enable traditional banks to become crypto companies. On that front, we are, of course, then seeing competition from, there are institutional pushes in Coinbase, FTX. Some of these large exchanges are also trying to serve as an infrastructure provider to the traditional finance space. So in one hand, that is a competitor. At the same time, you see a lot of those partnerships happening with the kind of absolutely largest banks, absolutely largest financial institutions. And they're putting all of their effort and all of their emphasis there, which means that there's ample opportunity a little bit further down, when it comes to the size of the institutions. But I'd say the cryptocurrency exchanges, and some of the biggest there, that are kind of trying to move into being an infrastructure provider to TradFi, and also some traditional finance structures that are trying to move into crypto. But I believe our unique competitive advantage is one in our research, which is kind of internationally recognized and heavily referenced and kind of respected. And two, our focus. We have a razor sharp focus on this segment only. We don't have 30 million retail customers we also have to cater for, and so, which means that we don't get that trade-off. It could be kind of luxury to have that, but that focus enables us to be kind of more efficient, more targeted, and more tailored for our segment.
All right. When it comes to your financials, first of all, regarding gross margin in percent, what are the biggest drivers for your gross margin?
Yes, so if you look at our financials historically, it's a bit messy because we both have a brokerage where the whole kind of trading volume is accounted for as revenue. So on trading, you would typically see around a margin of around 1%, 1 to 2%, depending on kind of the coins or the sophistication of the trade. On the fund and asset management side, a 2% AUM is kind of the borderline what you can do here. It's a little bit above the average for private banking, but also being a much more exotic product category, especially also with the volatility. 2% is kind of what you expect to see on AUM. We have in Arcane a green mining operation. We are actually exploring offering that exposure as an investment, so the cash flow that the mining operation generates to our investor base, and we find that very interesting. But kind of the mining has a very high margin. The trading, when you count the full volume, has a margin around 1%. So it means that if you look at our financials, it requires some dissecting to pull it apart.
Yes.
We had a gross margin of around 10% the last quarter, up from 8.5%, but that was kind of driven from the high margin of the mining.
Okay. And overall overhead costs in the group, where do you see that go for? Do you have a lot of investments to do when it comes to recruitments and so on, or?
No. And that is the very powerful thing of being able to leverage the best of cloud services today. Even the likes of Coinbase have tech stacks that are more than 10 years old. We're building on Google Cloud, which offers, in many ways, cloud as a service. That means that we don't even need DevOps. We can hire those services directly from Google, which means that we can, with a small and very high-powered team, get really, really far. So we expect to remain lean, keep the number of employees relatively low, and really leverage the scalability we can get from building on, in particular, Google Cloud, but kind of the best of cloud services. So, and also going forward, we don't expect any major investments in the short term.
All right. And you touched on a little bit earlier regarding the regulatory landscape. How do you expect the regulatory landscape overall regarding cryptocurrencies to evolve during the coming years? Would you say any big changes in the market?
We are going to get more clarity.
Yep.
Currently, there are no capital requirements. That's going to come because there will be big exchanges that blow up. For us, it's kind of really pushing for segregated managed accounts so that the client's funds are segregated from ours. So in the case that Arcane will go bankrupt, the client's funds wouldn't be at risk. That will not be a problem to us. Yep. We already have AML, like KYC, that standard package is fully implemented across Europe. But what is important for me to point as well is that we are working with regulators in Norway, in Sweden, in Europe. We are part of different working groups, and we are being consulted, and we are participating actively. I had a 2 hours meeting with Parliament and the Finance Committee in Norway yesterday, both to make sure that we are fully informed on exactly what's going on, not only what is kind of getting out in the press, but also to help educate so that the regulation strikes the right balance between kind of for protection and innovation, but also becomes meaningful. Because there's a lot of early drafts for some of this regulation that is inconsistent with how these assets actually work in practice, like in how cryptocurrencies actually work. So, but overall, long story short, more clarity, more legitimacy for the sector, and that will help drive growth.
When it comes to the sort of biggest challenges for the industry going forward, this is a major part of it, I would assume, to achieve more clarity from regulators, but that would also yield more clarity for the investors, I guess.
Yes, absolutely. And there are a lot of projects that will not like regulation. There's also one other area that will be much more regulated, and that is investor protection. So we have MiFID II, where you have to prove that your investors are capable of understanding your products. That is not currently applied to cryptocurrency assets, and you see retail investors being exposed to products they absolutely shouldn't. They don't have a clue about what they're investing in, and that will also go away, and that will threaten the business model for a lot of the more opportunistic, retail-focused crypto projects out there.
And to sort of sum up here, how would you sum up perhaps the biggest challenges, but also what the biggest opportunities are for you as a company in Arcane Crypto for the next couple of years, perhaps?
Yeah, the biggest challenge is actually to remain focused. There's so many opportunities, and it's very easy to get distracted. And being a relatively small company and young company, a big risk is that you kind of say you do a partnership that you think will be great. It's a great name that you're doing it with, and you commit a ton of resources trying to get that to work. And just because the name was so big, and then you forgot to actually stay true to the mantra of only building something that the user wants, to actually let the product team drive where you're going. I view that as the biggest risk, that we like potentially spread ourselves too thin or end up kind of barking up the wrong tree. The biggest opportunity really lies in our scalability through the platform we're building up. We're going to launch the first version of the investment application during this quarter. We're going to launch the first version of the trading application later this year on the platform. And to really get that model where we can get kind of the integration with established players so that they can kind of add their whole user base, and then we can be the infrastructure provider. That's really where the massive upside is. We could build Arcane into a profitable and nice company serving high net worth and family offices ourselves, but the real differentiator lies in the scalability of our tech architecture.
Okay, thank you very much, Torbjørn, for this very interesting presentation, and best of luck going forward.
Thank you, and thank you for having me.
Thanks. Och till alla ni som har tittat, tack för att ni har det, och välkomna tillbaka strax.